Hello everyone and welcome to Day Trader S&P 500. This is Dale Woodson, editor of Woodson Wave and Day Trader S&P 500. Today is Thursday, August 18th, 2022. I want to go in a different route here. We're going to start talking about some Fibonacci time spirals, if you will. We'll start off with that. By the way, we touched on that a little bit on the Elliott Wave Hub yesterday. Thank you for all of those who participated or were in the audience. It was a lot of fun. I enjoyed it, and hope to have another one in the near future, and I'd be glad to do it again. It was cool. Anyway, this is the first time spiral I made. I started doing Woodson Wave Report in 1997, and always started at the tops looking for a 55-day low, which we got 55 plus 1. As you know, a lot of the lows happen lows happen 55 days after the all-time high. But you can see here, for those of you who are a little newer to the program, we've shown this several times over the years. You can see this caught virtually every turning point high, not all of them, but almost all of them, for 7 years. You can see this is a weekly chart here. I used to do the Dow back then. I do the S&P now because not many people trade the Dow. Everybody trades the S&P. But anyway, here's our weekly spiral and our weeks of the turn date. And there's a slippage, minus or plus 1 to 4. One was at 13 plus 1, 14 days. But a little bit of slippage there. But it's days when we're looking at weeks. So it's all within the week. And you can see it lasted for 7 years from 8/24/99 to 11/16 of 06. By the way, I write orthodox top. I know the market topped on January 18th, but I had figures and multiples which had a price and a time there, so I called that the top, and that's how I was able to catch all of these turns, because I was starting from August 24th and not the January 18th, the actual high. So to me, that's still the orthodox top. Okay, you can label it however you want, but that was the original Fibonacci spiral chart, if you will. Okay, let me see what else we have here for the spirals. I want to get into the let's don't do that one first. Let's go with this one. And all the spiral charts I've done, the Fibonacci time spirals, in 25 years, they all started from highs because I was looking for a low. I was looking for the 55-day low, and if it went further, that was great, but that was my main thing, to find the low. But for some unknown reason, I started one on March 4th of 21, and it caught all these turning points all the way up. It didn't catch the actual all-time high, but it caught the high in November, which is very near the NASDAQ high. And now so far, it has caught the next turning point counter trend bounce higher on March 29. We'll see how this works out, because as you know, these Fibonacci numbers get farther and farther apart, okay, because you add one to the previous one and you get the next one. So this is a weekly chart again, and this is looking out to November of 2022. So we'll see how that plays out, but that's interesting as it was low, because you can see the slippage here is 0. There's none on this weekly chart. They've all fallen within that week. So we'll see, what happens November 27th, the week of. Okay, let's see what else we have here on the spirals. My apologies. Where are those? I had to move everything over. Okay, that's that one. And let's get into this one. From that 329 counter trend bounce higher, this spiral chart, it has a little bit of slippage of a trading day here or there, or 2 days at the most, but we are looking at an hourly bar, and you can see low, low, high, low, low, counter trend high. The next turn date is 8/20, which is Saturday. So if that's going to be accurate, then we'd expect the market to turn one trading day before, which is Friday, which is tomorrow, the 19th, or Monday, which would be the 22nd, more likely on the 19th, okay? There's absolutely virtually zero chance it's going to mark a low. But we'll see if that thing turns there, okay? Getting into our Fibonacci time spirals. And then we'll get the next one up here, and I keep clicking that because I'm into, here we go. I had to change things, okay? We had that one already. And here's the next one. From the all-time high on January 4th of this year, we got a low, then a high, then a low, then a high, then a counter trend bounce high, counter trend bounce high, and here we are with 825, which I believe is Wednesday of next week. Okay, that's the next one in the sequence. So we'll see how close that one comes in conjunction with the August 20th. So we're looking for, we have two little combination of targets, 820 to 825, to say this thing should mark a turning point. We'll see how they work out. You know, we have wave price, wave structure, wave price, and wave time in that order. Structure is number 1, price is number 2, and time is number 3. And when they all marry, it's a beautiful thing. Okay. Oh, by the way, I wanted to mention on that Elliott Wave Hub we did yesterday, I'll put a description in on the bottom because I think that's still up there where you can click on it, and I know they're going to put they recorded it, so I don't have the link for that recorded version yet, but I checked earlier and that was on there, so it still may work. That link I'll put down in the description below. Okay, so let's go a different route here today. I'm going to look at the S&P, do a little longer term, and we'll work on that. Okay. As you may or may not know, I learned Elliott Wave accidentally. The first pattern was a triangle. It was back in 1996. For months, the market didn't seem to have any form. I don't see 5 waves up, 3 waves down, 5 waves up, or vice versa. 5, 3, 5 on the down. It was going sideways. It's not to do with this chart. And long story short was, I think it was August of that year, it broke down 55 days after the high. It made a low, and it was a triangle. And I was like, oh, okay. So I happened to learn probably the hardest pattern first. So I don't miss triangles because that's how I learned Elliott Wave, accidentally. So we call this triangle early from the January 2018 high. It's an expanding triangle with higher highs in B and D and lower lows in A, C, and E. Okay, so that has to be a 4. Okay, so this should be a 5. The question is it done or not? And then the question is, what is this correcting? So let's just work our way backwards, and that's the way I've done things before, from the known, the 4. Okay, if this is either 5, and I pointed this out before, or 1 of 5, depending. But we're going to look at the bigger picture, even bigger than this. But let's just let's get a little retracement going here, if we can, and see if it just corrects this low, 2191. I hit that pretty good, and this is, I think it's 48.18 if I'm not mistaken, and I've got it at 23. Let's see if we can get a little bit closer. 1540. Well, that's off by a couple points. Okay. Anyway, we're looking at, it didn't quite hit the 382 yet, which is at 38.65. It's probably a couple points higher than that. I could take the time. Let's just do it. Okay, this is what I normally do. I'm gonna stretch this out. I know that's 48.18, right? Yeah, and let's get it on 18 if we can. Bear with me. Gosh darn it, we're going between. Okay, we're gonna settle for 19. But if I was just doing this for my own and for my reports, I would get it on the button. Okay, so we got 35.67, 35.20, and 29.61. That's if it's just correcting this. Okay, we'll see, because if that would be a 1, then that would be a 2, and 2s are usually sharp, but we'll see. Let's get that off of there now. Okay, let's remove that. Remember, we've got the known 4 there, so we're going to go back a little ways here, and that was from the 2020 low. Let's go back to the nearest low from there, and it's 2009. Okay, let's just look at that, and let's get a Fibonacci extension on there. Again, this won't be to the penny, but if you want to say that's 1 and that's 2, look at where that 3 hit. It was right on the 1.414. So that would be, let me label that for you guys. Okay, we're going back to the 2009 low, and we've got a 1 and a 2, and that's a 3, and that's a 4. We know that, and that would be a 5. Okay, and that's probably needs to be a bigger degree of trend. Let me fix that there. What do we have there? We'll make primary, because I believe we had that. I've got that actually typed in. Okay, so if that is a 5-wave pattern and the market is correcting from the 2009 low, by the way, I think this was a correction from the 2009 low. You can see right, well, let's look at it, okay? Let's get this Fibonacci retracement. Let's see if that retraced 3. And not quite, but let's look at the whole thing. What are we retracing this entire 5 waves up from the 2009 low? That's fairly close. You can see the 382 here is at 2256, and that's right in the previous 4th wave of 1 lesser degree. That would be a perfect retracement if it is retracing the 5-wave advance from the 2009 low to the 2022 high. Okay, but let's don't stop there. Okay, let's go back. All right, and let's remove that, get that out of the way. We're keeping that known 4, but I'm gonna move that out because it's going to get a little more crowded here. Okay, and the next known big low, and I think we already have it here, is from 1982. Okay, let's look at that if we will. And we had the 87 high and the 87 crash. That's a 2. Twos are long and sharp. Okay, and there's a couple different ways to label this, but for the purposes of this argument of the bull market starting in 1982, we're going to use that's 1, that's 2, that would make that 3, and that'd be a long, I think it was 9 years of wave forward and 5, and then within there we'll have a 1 up, 2 down, 3 up, 4 down, 5. But let me show you guys how this breaks down. Okay, we haven't looked at the long term in a long time. Okay, there's the 1, and again that won't be exactly accurate. There's a 2. Look at that 3. It's at a 1.618, 4 here, and then a 5. Okay, so that is pretty cool if you ask me. Let's put in a fib retracement for wave 3, see what the 4 did, and it went right near the 382. Okay, so again, little Fibonacci and Elliott Wave perfection. There we go. Remove that, and let's see. So that's 1, that's 2, that's 3, that's 4, that's 5. Let's see how 5 relates to wave 1, and we can move this up here, and we have perfection. Okay, so 5 overshot. I may be off by a little bit there, but you can see this is how 5 equates, if you will, to wave 1, and it's perfect. So people might not want to go here, but if that is a 5, if that is a completed 5-wave pattern, and you saw the Fibonacci perfection, 3 had a perfect Fibonacci to 1, 4 was a perfect Fibonacci correction, and 5 is a perfect Fibonacci extension. This is Elliott Wave perfection and Fibonacci perfection. So let's see what we have here. We get a retracement. Again, this won't be right on from the 87 low, and I think I've got that about there. Again, the 382, these numbers don't fall out of your chair. 1109, and that is near the 4th wave, and a 50% is 703, and that's right near the 4th wave low back in 09. Okay, I think I remember it was 666 or something like that. So and then the 618 for what it's worth is 446. So that's what we're looking at. That's a beautiful picture, if you will. That's everything is in Fibonacci perfection. And again, it starts with identifying that 4. Okay, and that is an expanding triangle, and then we work our way backwards from the 4. If that's a 4, then that's a 5. Okay, then where is 1 and 2? Okay, and that's within that 5-wave advance. Recall that we did a correction from here, the 2020 pandemic low. Then we saw what are the numbers for a correction from the 09 low, and now we're going all the way back to the 1982 low. It will be one of those, and it should be this one at least, unless or until this high in January is surpassed. And when it is, all that goes away, and it's wrong. Okay, let's see what else we have here. I want to show you guys. I'll just jump to the report. I want to jump into the ES and just show the very short term what we're looking at here. Let me get that afternoon report that went out today, and you will see. Oh, there is the anyway. Here we're looking at the 10-minute. Okay, the last 5 waves. We have a 1 up, a 2 down. It's possible that 3 extended here. I got into all that in the last couple days. It could have ended, and this would be a 5. It all depends on this decline here on the 10-minute. You can see our targets there for 4. Almost hit the 382. And if we're going to have a 5 up, I think I have the target for 5 up. That explains the it's 43.38. Okay, need a break below 41.13 down here to confirm that that move up is complete. Okay, we get a break below 41.13. That move is complete. The report I put out yesterday had that as a 5, but I want to show everyone the third wave extension in case it's not. We make sure that our subscribers are aware of every possibility so they're not whipsawed and they're not surprised by anything. And we have confirmation, and we just have targets and confirmation points and make or break points. Okay, so we get above 43.27, then our next target is 43.38 if it goes above here. That'd be nice to see if it goes near our Fibonacci turn date. You can see 820 right there, and there's that 43.38 50. Okay, and it went through the 1272, the 1414, and that is the 1618 up there. So we'll see how that plays out. Let me see. I may have that on an actual chart. That would be, is it this one here? Nope, that's the hourly. It's this one here. There you go. Okay, and you can see the 1, 2. You can call the 3 complete right here. That's the chart I showed subscribers yesterday with a 4 down and then a 5. Okay, and that's where those targets came in. Here are the fourth wave retracements. If this count in red is correct, we got a 1 up, a 2 down, a 3 extended, and then 4 is in play, in progress, and there are the targets. Again, if it's a 4, that's 618 is at 41.95. If it's a 4, it should not go below the wave 1 high, which is 41.88. So we'll see how that plays out. We've got a turn date on Saturday and another one on Wednesday. Looking for a high, and let me just see if I can get back here with the, there we go, the bigger picture on the S&P going back down around. We've got that A down, B up. You can see that that the S&P hit right on that 618 retracement, which is right on the 200-day moving average. We don't use that like a lot of people do, but it's there, and it's at the same spot. Okay, so we'll see how that works out. Okay, that's it for today. You guys have a good Friday and a happy weekend. Until next time, take care, everyone.